Are we at peak interest rates? Welcome to the weekly market update, everyone. It is Tuesday, the 4th of April, 2023. And just before I begin the presentation, you do need to be aware that anything I say is general advice only, and it does not consider your personal financial circumstances, so you have to decide if what I'm saying is appropriate for you. So it's RBA day today, guys. Obviously, the RBA has decided to not lift interest rates further. That ends their run of 11 consecutive lifts, and they're holding our cash rate unchanged at 3.6%. In the accompanying statement, they were adamant that they would potentially lift rates further, sort of trying to fake everyone out, I guess, going, oh, we might lift rates, we might come back and do it again. Don't say that this is the peak because we might keep going. But the reality is that in the past, where they have stopped raising rates after a period of strong rises, that's usually the end of it. That's usually the end of the tightening cycle, and usually the next move is actually a rate cut. So it'll be interesting to see what happens from here. I think there are early signs that March data is weaker than February's data, especially in the US, and that maybe this rate pause will be the end of the tightening cycle. I know in the US market, in the US analyst community, economist community, they're also starting to forecast the end of the rate tightening cycle. So generally all around the world there is a bit of a view that the current tightening cycle is about to come to an end, and that's been a really big boon for shares. We've seen prices push up a lot over the past week, even fortnight really in the US, and most of that is due to this view that we're seeing an end of rate rises. And so I think this week it's been all about our market playing a bit of catch up. If you watched my video last week, I did talk about that. I said there's every chance we do play a bit of catch up, and that's what we've seen across the past week. In fact, we've jumped over 200 points pretty much from the lows of the prior week, and yeah, that was really kind of our market cottoning on to what everyone else around the world seemingly understood a bit earlier, and that was that these bank and financial crises are bringing forward the peak rates. They're bringing forward the whole top out of the current rate movement. So for our market, we finally caught up, and yeah, we've had a fantastic sort of week and a half really now. The next thing that could throw a bit of a spanner into the works of this narrative is the oil price. Oil was the big driver of inflation gains initially, and we saw the oil price rocket to 130 plus US dollars per barrel. And the fact oil prices have come off has really also reduced inflation, reduced CPI increases as it's fallen. But OPEC wasn't content with that. They weren't content with the falling prices. They weren't content with oil dipping to 70 a barrel, and they basically said, well, you've had your fun, inflation's getting under control again, we're going to cut our production. And that's forced oil prices much higher across the past few days, and it's giving a bit of a spanner in the works for central banks who are forecasting these drops in inflation. Well, what happens now if oil prices start pushing up? My personal view is that it's not quite enough of a production cut to really send prices dramatically higher, but we will have to wait and see. If economic activity doesn't slow as much as expected, maybe this cut in oil production will force oil prices significantly higher. So it is all a little bit up in the air at the moment, and that comes after a very, very strong move up in US markets based on a view that inflation was topping out. So if you look at the past 2 weeks, US markets are up extremely strongly. They bottomed out around 3,800 on the S&P 500, and they just eclipsed 4,100 over the past couple of sessions. For me, technically they look likely to reach the 4,200 level, but we could see a bit of a breather first. We could see a bit of a pullback to the trend line, could see a bit of a pullback to a potential support level, which may be at a prior resistance level. And I'm just saying that based on the strength of the current upwards move. It does seem a little bit too steep. Usually in upwards moves, you do get pullbacks as they happen. So maybe a pullback to trend, pullback to the 50-day moving average here maybe, and then perhaps a continuation higher. This move is being driven by, peak rate expectations, the fact that the US is not expecting too many more interest rate rises. So any potential interruption of that narrative is what you'll be looking for to disrupt this upwards move. And like I said, that oil or OPEC production cut does have the potential to create a bit of a spanner in the works there. And so that's what I'd be looking for the US market. For our own market, we're finally playing a bit of catch up. I did talk about it last week, guys. So yeah, look, it really has come to fruition, but we've had a pretty monumental run of gains in a row. I think it's 7 sessions in a row now. This was last Tuesday, so 7 sessions in a row now. And it's very, very hard for the market to do more than that without taking a bit of a breather, without having a bit of a pullback at some point. Even when we had that really strong rise in January, you saw it was dotted with red days. It was dotted with down days, just because it's very difficult for the market to continuously move in one direction. 7 days in a row is a lot of monodirectional movement, so don't be surprised to see a bit of a pullback, a bit of a breather. Maybe you're looking at 7,200, maybe back to sort of 7,130-ish here, and then perhaps for it to continue higher. The one space I'd be looking for around a potential pullback would be the material space, particularly the large iron ore miners. Iron ore seemingly found a bit of resistance across the last few days. It's down across maybe the last 3 days. It's down about 5%. So it's going to be very difficult for our large miners to keep rising with iron ore coming off as it is. And it's going to be very hard for our XJO to keep rising if our large miners fall. So that's a potential interruption I'd be looking for in our market. A bit of selling in perhaps BHP, Rio and Fortescue. Overall though, market is still looking quite positive. The RBA pausing today is another positive for the market. In the short term, earnings are holding up, valuations are holding up. The banks are looking to find a floor, and I could easily see our market pushing to say 73.50 on this upwards move, and then if that breaks, I'd be looking for around the all-time highs at 7,600 points. Things remaining fairly positive. There are a few sort of storm clouds with the iron ore price coming off, with oil seeing a production cut from OPEC, and that's those slight clouds are still only small dots in our blue sky at the moment. So that's it for this week, guys. Hopefully you enjoyed. If you did, leave a like, leave a comment, click subscribe, and I'll hopefully see you in the next one. Bye for now.